Hello and welcome to TA for Traders. It's Tuesday the 6th of June. In this short video I'll be looking at the charts on the US dollar against the Japanese yen. What we'll see is that the dollar's fallen below its 200-day moving average, which is a bearish sign. It also remains in the long-term downtrend, which is a bearish sign. But there is support about to come in from the 50-week moving average, which is rising. So on the daily chart, you can see that I've kept the downtrend in place. I've had there for maybe 3 videos now, maybe even 4 videos. And what you can see is that although we did break above that downtrend line in early May, on the 9th of May, we didn't break the pattern of lower highs. The high that we had on the 10th of May didn't go above the high that we had on the 10th of March. So the trend was still relevant. It could have given support and we came back and then consolidated and moved up there, but that did not happen. We had a big fall on the 17th of May, took us back below the trend, and as you can see since then the trend line has been the significant factor and has stopped any advance. On the moving averages, you can see that the 20-day has now rolled over the yellow line. And is tracking down very quickly towards the downtrending 50 line. When they cross, that will create a bearish signal, a bear cross, which would give further downside pressures. You can see today that the fall today has taken the market below its rising 200-day moving average. You can see that back in the middle of April, 16th, 17th of April, that this 200-day did give support. Today it's given no support, another negative sign. What now are the key factors? We've got support down here, about 108.19. But if I move to the weekly, you can see that the first key support level, and that will be this rising 50-week moving average, which is at 108.97. So that's the next support level. You can see that that did hold the markets on that dip in the middle of April. So let's wait and see what happens when we come back to there. But at the moment, it does look like we're coming back there. On this weekly chart, you can see that we're in a downtrend on the RSI, and that it is it is below 50, 44.68. Sorry, I couldn't read it. It's purple writing. And also the MACD are negative. Let's quickly just nip back to the daily chart and look at the RSI there. And again, you can see it's in a downtrend, well below 50, 36.66, and the MACD are negative as well. On the short-term picture, here looking at the 4-hour chart, perhaps we've come a bit overextended to the downside. We've moved well away from the moving averages, although obviously they are tracking down and will give resistance on any rally. Also, maybe the RSI just a touch starting to get slightly oversold at 26.99. But the signs are still negative. MACD still indicative of a negative momentum and giving pressure to the downside. So really, in the short term, maybe on this 4-hour chart, you get a bounce towards the 110.5. 110.4 level, but that should be used as further selling opportunity. On the support resistance levels, we have got resistance at the 50-day, 111.1717. Then the next resistance is on that downtrending medium-term trend line that I've drawn, which presently is at 111.366. With support coming in at that 50-week moving average at 108.44, and then those lows of April, middle of April, at 108.13. So that has been TA for traders, having a look at the US dollar against the Japanese yen. Didn't look a pretty picture. Maybe in the short term, looking at the 4 hour, we're slightly overextended and oversold. So maybe we'll get a short term rally. But really the medium term picture remains bearish for the dollar on these charts. Thanks for watching TA for Traders. Please remember that these videos are for educational purposes only and are my opinions, and in no way are they meant as an investment recommendation.